All right, good morning, all. Welcome to the SensaEdge. This is your host, Zoe Beer. We'll be diving into one of the new strategy today on ratio call spread and how to profit from them. Before that, if you have been following our podcast, we see that the few Congress trades, which we discussed in the previous podcast, Tempus AI, is up about 117%. Pretty good, right? So continue to follow that. Before we get into today's topic, a quick briefing about what happened yesterday. US stock rose again yesterday as the chip makers made gain and investors looked to put tariff concerns in the rear view. One notable decliner yesterday, Alphabet Google, took its worst single day market cap hit history. Its stock slumped around 7.3% after showing lackluster revenue on its latest report card, despite the investments. The notable gainer for this week, shares of Palantir Technologies were as indestructible, popping about 24% on a monstrous earning beat. What is going on with the Palantir? So we're going to be jumping into Palantir and we're going to learn about the strategy for here. So let's call it getting funky with Palantir and what we can learn, what strategy we're going to be betting on. Someone has made a whale sized short term bet, and it appears that so far they are wrong. Palantir had earnings overnight between 3rd and the 4th of February. The earnings and the guidance were enough to send the stock soaring to the tune of about 25% up on that particular day. And then an odd thing happened. After earnings, someone came in, bought a three-legged trade that isn't working so well just yet. You might even call it a three-legged dog. Sorry, that was terrible. Using the Sensa Market option flow tool, we could see it unfolding in real time, not delayed. Someone bought $20 million of $89 strike price. Let me bring up the screen here so we can kind of like dive into that. Before jumping there, Palantir trading around $101. This is the jump which happened from close to like $82 all the way going all the way to $103. So yesterday we saw a $2 dip, but still trading pretty strong at $101. So this is the option flow. It is quite easy. If you go to the sensamarket.com, you can jump into the option flow. You can go into the filters, change the states, select any premium more than $1 million. And then if you want to like search those companies, you can track that PLTR is selected. And I see this very unusual trades coming in. This is what I was talking about, $20 million of $89 strike price. And did you see this expiration, which is expiring this Friday? Wow. We know they were bought because all the trade swept the ask and raised quite a bit. This occurs when a trader buys all the available contracts being offered at once, so that he or she so that to then go down to the next best quote, buy all those, and then go to the third, etc. This all happens very quickly, but it tells us the trader bought those contracts. They then bought $3 million, if you can see here, of the $110 call expiring on the same thing, February 7th, on this Friday. Again, lifting the offer price, and then sold about $2 million, which is a bearish bet, expiring on Friday. Pricing has changed a bit from now to then, but it's roughly 1:4:1 long ratio at present. The funky flash concoction, that's interesting to say the least. So while it's more than possible that our trader could have taken a different position based on looking at the trade through the lens of today's pricing, the general trade structure is the same. Trader is long lots of premium in a lower strike, very much in a bullish position. Long more premium in higher OTM strike, still bullish, and short premium further out. The premium ratio 20:2:3. It gives us something like a skewered broken wing ratio butterfly, something like that. Again, skewered broken wing ratio butterfly. So let's jump in and then get into that particular strategy. And why does this make sense now? The trade is looking for a move higher after the earnings. So if I jump into this particular graph, the trade is looking higher. The trader looking for the price to go up higher after this earning. It actually does quite well on a very small move. So it performs exponentially better and better as the time goes on for the Palantir if it drives higher. The risk here is this is an account killer if the Palantir gaps up past your particular strike price. There is a naked call here which can wipe you out. Be extremely cautious. this trade could be suitable for like intermediate advanced trader, or you're continuing to watch on Palantir's growth in the next couple of days. So let's jump in. So this is the ratio call spread. I've already selected the option strategy, which is expiring around February 7th, which is pretty much one day to expire. Again, based on the particular strategy, this is buying a $95 call position, one contract, and selling two of the positions on 110 call. So this is where we can adjust those price range and everything. As you can see, on if I do this, the current net quote is around 6.33. In order to get to this particular strategy, I'm spending around $633. The maximum profit, if I am correct, somewhere around 110 is where I'm going to be making around a good maximum profit. This is where the bearish has been betting on the bullish that this is going to go up, and if it comes down, which if it happens, I'm going to be losing the money, which is close to $633. But the thing also is, if it goes beyond this 118, which is the another break-even point, this is the naked call where I could be losing a lot more. So there's two outcomes. If the stock rallies, you earn money roughly to the short strike, which is $110. If the stock drops, you lose the money down to 95. Maximum profit right around 110 on Friday. Again, note the risk to the upside is unlimited. You need to travel through the profit zone to get into this particular risk zone, but this can happen very easily. Do not put this trade on if you don't have ability to monitor it. All right, let me bring back myself here. All right, in conclusion, we don't know that much about the whales that live in the ocean. We don't even know who are the whales who live in the market either. But what we know here is they do place large trades, and what we can see them and try to understand their motivation in case that's a good trade for us and our accounts. Join us daily for the market insight, trade ideas, and actionable insight on all things volatile in market. Again, be sure to subscribe, leave a review, and follow us on the platform. Trade safely and allocate responsibly. Thank you all.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.